The global secondary metals and recycling industry has just returned from its biannual meeting in Shanghai, China, the BIR Spring Convention. That was held, it has to be said, has been a tough time for the business. Although there are 1,100 delegates there from all around the world, 57 countries represented, that's down from around about 1,400 in previous years. As Bjorn Brookman said, welcome to Shanghai, the city where the past meets the future. But for the industry, it's the present that they're focusing on, and times are tough, it has to be said. Nevertheless, even though margins are tight and costs are high, there is business to be done, and one of the main talking points at the convention has been the growing trend towards protectionism, which is something that is anathema to the BIR. This was highlighted by India recently, which raised import duty from 0 to 2.5% on imports of aluminium scrap, and imposed a special additional duty of 4% on brass scrap imports. That's not good news for the industry, which relies on the free and fair movement of goods, and when added to indirect pressures that have stemmed in other areas, China's green fence policy, which has held up some shipments into the country, it's placed some strains on business. Nevertheless, the market going forward is optimistic. At some point things will improve going down the road. Austerity won't last forever, and in countries like China there are increasing efforts to recover more. China imports a great deal of copper, but it doesn't recover as much as it could, so that will be one of the themes going forward. Other areas that the BIR is looking at tackling is fraud and theft. Strong measures are likely to be taken there, increased vigilance is on the horizon. And as well, there'll be a new hand at the tiller at the BIR itself. Secretary General Francis Vase, who's been with the organisation since 1975, consummate politician and diplomat. He's retiring and he'll be replaced in September. So going forward to the next meeting, just some green shoots of recovery perhaps in some of the metals, in some of the markets and in some of the sectors, but there's a long way to go as of yet. This is Martin Hayes for Fast Markets. It's been a tale of two halves this morning for base metals prices here on the floor of the London Metal Exchange. Up to 1:30, not too much took place, it has to be said. State of paralysis really, as the metals markets, as well as all other financial sectors, geared up for this much-awaited US jobs report for May. In the case of the copper market, we saw business within a fairly tight $60 range, roughly around about $73.15 as a floor. 1:30, figures came out from the US. 175,000 jobs were added last month, which was above the consensus forecast of 167, and going into that figure, the consensus had been falling. So there was some immediate volatile trading after the number. Copper initially perked up to around about $73.50 a tonne, then it fell like a stone. Got back to 7,300, fell below there, fund sales triggered sales stops, down way into the 72, below 72.30 area, and then settled very groggily around about 72.40, 50-ish. That's still considerably lower on the day. As this was happening, the dollar was firming up a little bit against the euro. As traders behind me said, the reaction of the metal markets related to the reaction of the currency market, which does seem to indicate that the US may possibly be thinking of tapering off its bond buying monetary stimulus program. So as we say, a much more volatile session post the figure, likely continue through to the rest of this session, the end of the week, and with the Chinese holiday coming up next week, markets there will be closed from Monday to Wednesday. We can expect to see some further volatile movements going into the close. This is Martin Hayes of Fast Markets on the floor of the LME.